Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. Today we're diving into Cenntro Inc, and let's just say their latest report might have them on thin ice with Nasdaq. So, what is the big deal? Well, Cenntro Inc has been facing a bit of a challenge with Nasdaq, their stock exchange. You see, Nasdaq has a rule that says a company's stock price needs to stay above $1. Per S-Hair for a certain amount of time, this is to show that the company is generally stable and has investor confidence. Centro's stock dipped below that $1 mark for 30 straight days. Imagine a store having a sale where everything is less than $1 for a whole month, consistently. That is kind of what happened with their stock price. Nasdaq gave them a grace period, 180 days, which is about 6 months, to fix this. They had until the 22nd of October 2025 to get their stock price back above $1. Think of it like getting a warning from your teacher and being told to shape up before the next report card. And here is where it gets interesting. As of the 23rd of October 2025, Cenntro actually got another 180 days, another 6 months to get their stock price back up. This new deadline is the 20th of April 2026. So they got a second chance, but this also hints that they haven't quite hit that $1 per S-Hair mark yet. It is like getting an extension on a big project, but you are still being watched closely. They announced this news in a press release. This is a standard way for companies to let everyone know what is going on, especially when it involves major exchanges like Nasdaq. This press release is attached to this official filing, so it is considered part of the official story. Now, one of the things this filing tells us is that Cenntro is considered an emerging growth company. This basically means it is a relatively new company and gets some special treatment under the law, like not having to follow some of the same strict reporting rules that older, bigger companies do. They've also chosen not to use the extended time to follow new accounting rules, which suggests they're either confident in their current accounting practices or they want to appear more compliant. At its core, this filing is about Cenntro Inc, trying to stay listed on the Nasdaq. Losing your listing on a major stock exchange like Nasdaq is a pretty big deal. It can make it much harder for investors to buy and sell your stock, and it can also signal to the market that the company is having trouble. This is why they're working hard to boost their stock price. What they're trading is their common stock, which is basically a piece of ownership in the company. The very low par value of $0.0001 per S-Hair is pretty standard for many companies and doesn't really reflect the actual market price of the stock itself. The important thing here is the symbol CEN and the exchange, the Nasdaq Stock Market LLC. This is where their stock is bought and sold. Now, what does this all really mean? It is clear that Cenntro is in a bit of a pickle with Nasdaq. While getting an extension is good news in the short term, it highlights a significant challenge they are facing. The company needs to show investors that it can improve its financial health and its stock performance to meet Nasdaq's minimum bid price requirement. If they don't, they could face delisting, meaning their stock would no longer be traded on Nasdaq. This would be a major blow to the company's prestige and its ability to raise capital in the future. Looking at this filing, the story is less about booming profits and more about navigating a critical compliance issue. The fact that they've been granted an extension shows that Nasdaq is giving them a fair chance, but the clock is ticking. The company's leadership, particularly Chief Executive Officer Peter Z. Wang, needs to implement strategies that will not only satisfy Nasdaq's requirements, but also build genuine long-term value for shareholders. The risk here is that sustained low stock prices often reflect underlying business challenges, and while this report doesn't detail those challenges, the Nasdaq situation is a loud warning sign. The opportunity lies in whether Cenntro can successfully turn its performance around. Alright, that is our breakdown of Cenntro Inc, its latest filing. What is your take on this situation and what they need to do to succeed? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord link in the description below. Thanks for watching. See you next time.